Good morning, everyone. My name is Mike Rennick. I am the team lead, the senior broker of Team Rennick. We're part of that Grave Mangrove, sorry about that, it's early, Realty Associates team. We're proud to wear that badge on our shirts and in the business that we do. This is another edition of me sharing from the heart in terms of what's going on with the local real estate market. This week, we're going to talk about the November data that was just released, was just approved. Every week, I will bring you a different topic that pertains to what's happening here on the west coast of Florida. But so let's do this now. Let's bring in the data. Let's get into some good information. So let's take a look today at the local market. That's Sarasota and Manatee County. This is just the beginning. When you're a buyer or seller, we need to go deeper and understand your area of the city, your area in terms of subdivision or condo association. We can do that for you. After we take a look at the local market, we'll jump into the national scene. So right now, let's take a look and see what the local market results are. In a summary, the market is hot. Sales are up month over month from last year. So it's 2020 data over 2019. Sales are up 37% in Sarasota and Manatee County. The pending sales, the sales that will close in the next 30, 60, 90 days, are up 35%. Price is up 16. We're not giving up price to achieve those levels of sales. Days on the market. When a property gets listed, how long does it take before it's sold? Down 14%, given the current sales volume. How many months of inventory do we have? How many homes and condos in vacant lands do we have for sale? That's fallen by almost 60%. So the market is hot. When we take a look at this right now, I'll show you the data points. So for the number of solds, we see that it's almost 2,400. In 2020, there was about 1,700 that were sold in 2019. When we look at pending, we see it was about 2,400 that are pending. Going forward, about 1,800 last year. So sales, as I said, are up 37%. Pending sales, the future closings are up 35%. When we look at price, $2.34 per square foot this year, $202 last year. Price is up 16%. Days on the market, it's fallen 14%. 61 days today on average in 2020. Last year, we were looking at 71. We saw that there was a spike in June. It started to ratchet down ever since June, and we see it currently at a low point of 61. Months of inventory. Right now, there's 1.7 months of inventory on the market. There was 4.1. What that means is today, if no new listings come on the market and the sales volume hold, in less than 2 months, everything would be sold. The market is hot. Definitely is a seller's market. Definitely favors sellers. Let's take a look at the national scene. If you'd like to learn more, you can go into my website under Mike's-Market-Update and take a look. That's updated in real time for your viewing pleasure. On the national scene, we see right now, when we look at a housing market recovery index, it's compiled by Realtor.com. They take 4 components into effect: demand, supply, price, and time on the market. We see that the index is at an all-time high since February at almost 113. Buyers and sellers quickly jump back into the market this week after taking a break during the election week, according to Realtor.com's weekly housing report for the week ending November 14th. Move.com is a parent company of Realtor.com. When we take a look at the number of mortgages in active forbearance, we see that that's going down. I'm showing this data in these slides so we can try to predict a little bit what the future is going to bring. So the number of mortgages in active forbearance are falling. Upon exiting the forbearance plan, we're finding out that almost 55% are paid in full. 31% work out a repayment plan, and 15% are still in trouble, just to get a look at what's currently going on. If you need to go into the mortgage forbearance process, there's 5 steps. First, you want to contact your service provider, not necessarily the bank that gave you the first mortgage, but who you're making your payments to. Call them and explain the situation. Go into detail in terms of what you're facing and ask how they can help. Ask if you're eligible for protection under the CARES Act. Ask what happens when your forbearance period ends. What happens to the payments you were missed? What happens to the repayment options? When will the repayment be due? Are there any fees? And last, ask your service provider the agreement in writing and check to make sure it matches what you discussed. You want to do everything you can to protect your credit rating as best as possible under these trying times. Let's take a look at another quote. Managing Director of S&P Dow Jones, Craig Lazara. Housing prices were notably, and I am tempted to say very strong in September. The National Composite Index gained 7% relative to a year ago. Our 3 monthly readings since June of this year have all shown accelerating growth in home prices. September results are quite strong. Will this continue in the future? Time will tell. But we've got a strong track record in the last few months. If we look at the house appreciation rate since 1991, on a national average, home prices have increased about 3.8%. But since 2012, they've gone up 6.1%. This is annually, every year. If we look at median sales prices, this is the historic 3.8% I just talked about. That's what we would see, but let's overlay the actual, and we see how the numbers are up substantially over the 3.8% that we would normally see. Inventory and home prices, we see that the green line shows home prices continue to rise and the level of inventory continues to fall. Let's take a look at Lawrence Shun. He's a chief economist at NAR, National Association of Realtors. Such a frenzy of activity, reminiscent of 2006, raises questions about a bubble and potential for a painful crash. The answer, there's no comparison. Back in 2006, dubious adjustable rate mortgages taxed many buyers' budgets. Some loans didn't even require income documentation. I think we all remember that. Today, buyers are taking out 30-year fixed rate mortgages. 14 years ago, there were 3.8 million homes listed for sale, and home builders were putting about 2 million new units on the market. Inventory is only about 1.5 million homes today, and home builders are underproducing relative to historic averages. So we're not seeing the trends that suggest there's a bubble that we're in and things should fall off the cliff. Let's take a look at the mortgage rate. Mortgage balances, the largest component of household debt, rose by $85 billion in the third quarter and set at almost $10 trillion on September 30th. Mortgage originations, which include refinances, were at $1.05 trillion, the second highest volume in the history of the series and second only to the historic refinance boom of 2003. This is from the Federal Reserve Bank. So the mortgage numbers continue to rise. If we take a look at the household debt service ratio for mortgages as a percent of disposable income, though, we see that today that percent. So this is saying the amount of money that people have to spend disposable income, what percent are going for mortgages? And we see it under 4% for the first time in a long time. That's good news. Let's take a look at the future. What does this all mean? If we look at Jed Kolko, chief economist at Indeed, above all, the 2021 outlook hinges on the course of the coronavirus. Both the recent virus surge and the election make government emergency relief more likely. Next year will also start to show whether two of the big pandemic shifts will endure, from services to goods and from in-office to remote work. Even small shifts in these trends, if permanent, could cause big changes in how businesses hire, how job seekers search, where people live, and how much they earn. Things are changing. We're all living through that as we go through this virus, this pandemic, in these very tough times. Let's look at mortgage rates, though. Mortgage rates are at an all-time low, and in 2021, according to Freddie Mac, they are continued to forecast to stay low. Let's look at Danielle Hale, chief economist at Realtor.com. We expect home sales in 2021 to come in at about 7% above 2020 levels. So they're saying their prediction is home sales will increase in 2021. Continuing with the quote, following a more normal seasonal trend and building momentum through the spring and sustaining the pace in the second half of the year. While home sales are expected to lose some momentum over the last months of 2020, we're seeing a little bit of that locally right now. The December data is not out, obviously. The shallower than normal seasonal slowdown creates a higher base of activity leading into 2021 that's roughly maintained for the first half of the year. As vaccines for the virus become broadly available and economic growth reflects the resumption of more normal patterns of consumer spending, home sales gain even more in the second half. So the forecast for 2021 is strong. Let's look at home prices. When we look at the 12-month forecast, we see the difference from the reporting areas of the three different reporting areas. If we look at the 2021 forecast, everyone is weighing in on some pretty strong numbers. Any foreclosure increases will likely quickly be absorbed into the market, will not lead to any price declines, according to the chief economist at NAR. So when we look at everything overall, and I've shown some really strong numbers for our local area, I've shown some very strong numbers on the national basis. All signs point to a strong 2021. Real estate agents have sold more properties in 2020 than was expected when the virus hit. Many of us thought there would be a significant decrease in the overall volume. While there was some slow months early in the year, the market rebounded tremendously. When we look at what Eric and I have done, last year in 2019 was a record. We are up over 30% over last year in terms of closed sales. So we've experienced phenomenal growth here. So when we take a look at this, what does this mean to us? Well, like I said in the beginning, this is just the start. We have to go deeper. We have to look at the city that you're going to buy or sell in, and then we need to look at your neighborhood. That's when a strong real estate broker can put together a good market plan, a good way for you to win, whether it's a buyer or seller's market, and whether you're a buyer or seller, everyone can win in the right market if you have the right data. If you have any questions, please feel free to give me a call. My personal cell is 941-400-8735. I want all of my clients to have that. Eric and I at Team Rennick firmly believe that we need to be available at your convenience. That's the way to do business. So this is the market update with November data. This is the latest data that's been published. Thanks for watching. I'll be back next week with other things that are happening in terms of the local real estate market. Again, my name is Mike Rennick. I am the team lead and senior broker of Team Rennick, part of that great Mangrove Realty family. Thanks for watching.